Welcome to Astra Stocks. We all understand that global markets are determined by a variety of external factors. And when we talk about external factors, we obviously have to include the most significant and glaring problems that go on in the world, which are mostly political in nature. The best example could be the COVID-19 pandemic, and we saw what damage it did to the markets around the world. Now, the most recent and significant one has to be the Russia-Ukraine war that is going on right now as we speak. And you may ask, how does it affect India, and more specifically, the Nifty50 bull market? Now, to understand this, we have to take a look at previous incidents that are similar to the current situation. Look at Gulf War, which happened in 1990. When the Gulf War happened, the Nifty50 market had a 36% fall, and it took 6 months to recover, but when the recovery happened, there was a 312% rise. And when the Iraq War happened in 2003, there was a 16% fall, and it took 6 months again to recover for the Nifty50 market. Now, ignore the war scenarios. Let's take a look at what happened during the COVID-19 pandemic to the Nifty50 market. The Nifty50 market had a 37% fall, and it took a recovery period of 11 months for the market to go back to its peak. Now, let's get back to reality. We have observed that when Russia and Ukraine are in conflict, there has been a 5% surge in oil prices in the market. We're talking about the crude oil price. Crude oil price increase always leads to a reduction in global growth by 0.1 to 0.2%. Also, you might be aware of the fact that the European Union is completely against the Russian invasion of Ukraine. But you need to understand that Europe relies heavily on Russia for its own energy supplies. It's important to note here that 25 to 30% of Europe's total energy comes from Russian energy supplies. Therefore, Russia has a huge leverage on Europe when it comes to this conflict. Given that this scenario is going on and the Nifty50 market has to adjust itself after this war scenario, we can understand from past incidents that Nifty50 corrects at an average of 31 to 37% in a bull market. There is something called a post-bottom formation, which happens from the time the market has taken a fall, which is usually 4 to 6 months recovery during wartime, and for other events like COVID-19, it takes almost a year. Now, when you take a look at the Nifty50 market, on an average, the market has a 145% gain from its previous lows, which are corrected by 31 to 37% from peak. At present, the market has already been corrected 12.7% from peak, and a 145% rally is expected after this conflict is over. Now, these numbers might sound all confusing, but as an investor, what should you do about this? You should just ignore the noise and stay put with your current investment plan. You should deploy cash strategically and use this current dip to buy stocks accordingly. We understand that war and conflict cause irreparable damage to human life as well as property. But as an investor, you're supposed to make the best out of this situation. This is mainly because after a fall, especially due to war in a bull market, the index and the leading companies give huge returns. Also, we know from the past trends that bull markets get their much needed correction from these situations. Therefore, it's a great opportunity for long-term investors to allocate additional capital in equities. For more information on finance, trading, investment, stock market, do join the Telegram group given in the link below. If you have your own opinion on how the Russia-Ukraine crisis will affect the Nifty50 market, do let us know in the comments below. Like this video, share it with your friends, and subscribe to the channel for more content.